Hello, I'm Donald Leggett, and welcome to the latest focusIR London South East Investment Trust interview. I'm joined today by Mark Lebbell, and he is a senior analyst at Utilico Emerging Markets Trust. Mark has worked for many years in emerging markets, and in particular, his field of expertise is digital infrastructure. The Utilico Emerging Markets Trust has delivered an annualised return of 9.3% over 17 years, and currently pays a 3.8% dividend yield. Welcome, Mark.
Hello, Donald. Thanks for having me here today to talk about digital infrastructure at Utilico Emerging Markets.
It's a joy and a pleasure. Let me start by asking you an easy one. What's your role at UEM, Mark? And which part of the portfolio is your area of expertise? What exactly do you do?
So UEM, for the uninitiated, is an investment trust listed on the London Stock Exchange under the ticker UEM, and we invest principally in listed companies in emerging markets in the infrastructure space. And internally, we divide infrastructure into three sectors: utilities, transport infrastructure, and digital infrastructure. And I'm responsible for the team that looks after digital infrastructure in terms of the investment side. If you look at digital infrastructure, I guess, in terms of what we invest in, we're investing in fixed and mobile telecommunications, fixed line broadband and cable TV providers, data centers, communication towers, and satellites. And we're also increasingly investing in IT service companies providing, managing, or customizing digital services on those platforms.
Digitisation is a major driver of growth for emerging economies, yet different emerging economies are at different stages of the digitisation cycle. Does this make a difference to returns, Mark?
It's interesting because across UEM we have a broad spectrum of development in the digital space. For example, in South Korea, we're invested in a data center company, and in South Korea the speeds are sort of off the scale compared to what we'd have, say, in the UK. At the same time, in rural Africa, people are connecting to the internet for the first time, and we have some small holdings there in telecoms and mobile tower companies. What is interesting is that internet connectivity is becoming increasingly essential wherever you are in the world. But the level of service that you get will obviously depend on the affordability of the handsets, of the equipment, etc., to make it economic, I suppose, for companies to provide services. But there's opportunities at every level of the spectrum to drive returns and find growth.
Okay. And where does the physical infrastructure, the software, the physical hardware, which underpins this digitisation, where does that fit into the investment picture? Likewise, talk us through that.
Okay, so I suppose across UEM we're looking at infrastructure investments, and these all have a similar characteristic, really. They're providing essential services, and the business model is to have a large upfront capex to install this infrastructure, and then you collect a recurring revenue stream over a number of years, maybe over decades. And digital infrastructure offers opportunities that kind of follow that model, and we can invest in many ways. One is in specialist companies that sell services to other business customers or other telecoms companies, and they're providing assets such as data centers, telecommunications towers, international connectivity, and satellites. We also invest in telecoms companies that have their own infrastructure, and they sell direct to consumers and businesses, and the revenues there tend to be repeatable. They may not be on the sort of long-term contracts, but people tend to spend about the same every month. Although in that market, we do try to avoid the most competitive of markets. And increasingly, we're also seeing value in IT services as systems become more complex. Companies and governments particularly are outsourcing to specialists to manage, monitor, configure, secure their IT systems.
Okay. I thought it might be a useful idea to ask you to talk us through two different investments. A typical digital investment, which might be, a typical Utilico long-term hold, and also a slightly newer approach, something which you hope will outperform.
Yeah, certainly. So I suppose a company we've held for many years, since I think about 2017, is a company called City Telecom International. They're based in Hong Kong, and they're got a portfolio really of ICT and telecoms assets, serving mainly businesses and other telecoms companies, and they've got some assets there which are quite monopolistic in nature. They've been a very solid performer. They're very conservatively managed. They've got quite low gearing, very strong cash flows, and they've been increasing their dividends consistently for the last few years. In fact, since about 2007, when we first invested, those dividends have almost doubled. But it remains in the portfolio because it's still very good value. It's a low-profile, off-the-radar company. It's not particularly small. It's got a market cap of about £1.2 billion. But it remains very cheap and slightly unloved, and we're collecting a dividend yield that's approaching 8% at the moment. So that's one sort of very solid performer. A fairly new investment to the company is a company called Telelink Business Services. This is an IT service company based in Bulgaria. A much smaller company. It's got about 300 people, and they've been very successful in their home market, particularly with the Bulgarian government and the telecoms in the region, at providing all kinds of IT services and managed services. But they've realized that their skills are very much in demand in Western Europe and the US, and they've got a cost advantage. So at the moment, they are reinvesting their profits in growing the team, growing the sales efforts in the Western markets. It's a very young, bright and ambitious team, so we've got good hopes for them. And if they're successful in winning, expanding outside of their home markets, this business could be worth several times its current value. So it's a very exciting opportunity, but they've still got a solid domestic business to fall back on if they're not successful.
Okay, which takes us to investing in frontier markets or emerging ones. Is that how you actually see your emerging market world? Do you see it as being split into frontier markets and emerging markets?
We don't really see. We should see the world in two, I suppose. So MSCI, which you allude to, break the world into three: developed markets, emerging markets, and frontier markets. We see the world really as developing and developed. So our investment universe, as we see it, is the whole of Latin America. So I suppose Mexico downwards, if you like, whole of Africa, Eastern Europe, which would be sort of the Eastern Bloc countries as they were, and plus Greece and Turkey, and then the whole of Asia, which perhaps with the exception of Japan, as our sort of hunting ground for investment. So we don't split into this strict emerging markets. Upon saying that, emerging markets makes up the bulk of the portfolio. So emerging market countries would be, for example, China, Brazil, India, Indonesia, etc. But the frontier markets are also, very attractive. There's countries there like Romania, Bulgaria, Morocco, and others.
Okay, which it takes us neatly to when you invest. Do you actually follow the digital megatrends, which you're very good at, or are you buying into stable geographies with strong growth prospects, or perhaps just a combination of both?
I think it's a combination of both, and fundamentally we're bottom-up investors. We're trying to find great companies, with great prospects at great prices. That's really the driver. But it really helps if there are these sort of tailwinds, these trends. So yes, obviously it helps if you've got a stronger economy. It helps if the politics are stable. It helps if the macro environment is stable, the currency is stable. Regulation is also an issue. But as you alluded to, we've also got these global megatrends that we're looking at, which is the whole sort of digitisation process. And within that, there's sort of sub-trends, which I think our portfolio is benefiting from. And these are trends that are probably multi-decade trends, and they're pretty universal around the world. But as we spoke about earlier, countries are at different levels of development. So some of those ideas are the idea of faster networks moving, say, from 4G to 5G, networks rolling out deeper into the rural areas, a movement from copper-based networks to fiber, increasingly affordable technology. For example, in India, we're now seeing sort of 4G phones for under 1,000 rupees or £10. We're also seeing other IT services, so digitisation, perhaps of bureaucratic processes for governments where people might have had to queue up for hours or pay someone else to queue up for hours to renew a permit or pay a bill. It can now all be done online, which it drives a lot of efficiencies. And it's interesting in Africa particularly, but also in the Philippines, Kazakhstan, India, we're seeing a lot more movement from cash to online banking or mobile banking and financial services, which is, in some ways, the solutions in those countries are leapfrogged what we have in the West and particularly in the US.
Okay, and that's a very interesting answer, Mark. Let's take us to which takes us to the final question. The UEM Trust has returned 9.3% over 17 years, as we noted, which by definition means the UEM team have actually got a lot of things right over a long period of time. So, take a bow. Talk us through the process of getting into the portfolio. You have 80 to 85 stocks at any given time. It's a bit of a battle to get in. Tell us about that process and how you choose your stocks.
Absolutely, yeah, you're right. It's a tough selection process. Effectively, there is a competition to get in the portfolio. We have a fixed investment trust. We have a fixed portfolio in terms of assets and notes in and outflows, particularly. So, if we want to buy something, you've got to sell something else, and we have a big debate in the team. And ultimately, Charles, as fund manager, makes those decisions. But in terms of the process, we have a watch list of stocks that we monitor. We try and visit companies, meet management at conferences or meet them virtually. We're monitoring news, results from around the world. And every so often it will throw up some interesting companies, some interesting price changes, etc. So then we'll do a deeper dive on a particular company to really understand, what their business model is, what their drivers are, the environment it operates in, things like regulation, competition, etc. Who the management are, who the owners are, and what they're looking to do, looking to achieve. We all prepare financial models, looking at different scenarios that could happen and risks. We do a big deep dive on the ESG to look into what they're doing on those things. And sometimes we will do this work and we'll wait patiently for some time for the right opportunity for a compelling entry point where the price looked interesting or there's something has changed which is going to drive growth. And really, our criteria in simple terms is we're looking for companies that could double their price, adjusted for dividends on a 5-year view, and hopefully with limited downside risk as well. So that's really to get it into the research that we do to put a candidate for the portfolio, and then if it gets in, then typically we buy a small amount, and we'll build that position up over time. And there's daily debates in the office about prices and adding or subtracting things from the portfolio. We have a more formal weekly meeting and weekly reviews. And then we have a deep dive every month where we go through the portfolio line by line.
And do you tend to stick with long-term holds with a sort of 5-year view, or are you happy to be opportunistic, and if you get your money doubled in a few months, then you're happy to dip out and wait for a cheaper price again? Yeah,
occasionally we're opportunistic like that. I mean, it's not something that we would set out to do. We do tend to look forward on a 5-year view, but sometimes things move very fast. You can have a company that is bid for, or maybe something changes. So maybe you only hold it for 6 months or a year. It just depends on how it performs. And sometimes you think, well, we've had the bulk of the upside we were expecting already, and often we're looking for things that are a bit unloved, and sometimes they go from unloved to very loved very quickly.
Okay, which is what makes you an active fund manager. Mark Lebbell, thank you so much. That was fantastic. He's the senior analyst at Utilico Emerging Markets Trust. Thank you very much for that useful insight into the trends and investments which drive Utilico's returns. For more company information and to access the company bulletin boards, please go to the Utilico pages on London South East. And meanwhile, do follow us on Twitter, that's at London South East, and also on @_focusIR_, or register on London South East YouTube to receive alerts to our Utilico Investment Trust's interviews. Thank you very much indeed for watching.